Welcome to Dad's DeFi Space. This is not a signal channel. It's not financial advice. And I am just documenting how I navigate the markets from my trades to DeFi yields to what's brewing on Base and Zora. Some of these things work, some of them don't. But this channel is about process, not predictions. And if you're deep into Web3, welcome to my house. And look, this is educational only. Manage your own risk. Now let's get to today's video. You've been in crypto long enough. There's one line that shows up in every single cycle, technically three. But the one we're going to talk about today is the 200-week moving average. The 200-week is slow. It's not exciting at all. It definitely doesn't go viral like some meme coin on Twitter. But look, historically speaking, it's been the line that separates panic from a generational buying opportunity. The 200-week ends up being an excellent marker to show us the end of the bear market. So today we're going to look at the one chart only, and we're Bitcoin with Bitcoin on the weekly time frame, and we're going to break down why the 200-week moving average still matters. This is a no hype video, just structure. Let's learn. So before we go any farther, let's build this chart step by step. Now, I'm in my trading view chart on the weekly. We're looking at Bitcoin. And now I'm going to go to my indicators and type in 200 week. And what I'm going to put up is this one right here from Krypton Logic. It looks like it'll be a good one, the 50, the 100, and the 200 week. Now, this one, you can actually switch between the simple moving average and the exponential moving average. But for today, we're going to strictly look at the simple moving averages. Now, if you go up here on Trading View and click on the three dots to adjust the settings, I actually like to use red or white, red, and blue. Now, on this chart, the white would be your 50 week, the red would be the 100 week, and blue is the 200. Now, this blue line that we almost tapped into not too long ago is the 200-week moving average. Now, here's what makes the 200-week moving average different. It represents 4 total years of price data, and 4 years, at least so far, has been one full Bitcoin cycle. So this line reflects the average cost basis of the long-term participation across an entire Bitcoin market cycle. So this is not short-term momentum. We're talking structural memory of Bitcoin. This is not sentiment. It's just the market's long equilibrium line. That's what I would call it. Now, look, history isn't going to lie. If we zoom out on the chart, we'll see the blue 200-week moving average here, which we did break below last bear market. So let's walk through this calmly. We broke below the 200 week right here around the 8th of August 22, and we stayed below it for we stayed below the 200 week approximately 6 weeks. Now, this has not happened in the past, but when we decisively broke back above the 200 week moving average here in March of 2023, the bull market was on, as you can see. And from where we broke the 200-week moving average last market cycle, Bitcoin is up a total of 452%. Now, let's go back even farther in time. What we're going to do, zoom in on 2015, this bear market cycle. So in the 2015 bear market, prices fell. This right here begins your capitulation. And what do you see? We had one massive capitulation wick right here on August 17th, 2015, and we broke below the 200 week. We bounced right back up. That was just a wick, and we don't care about the wicks on the weekly or the monthly. Bull market back on. But of course, back then, Bitcoin was way more volatile. And during that last market cycle, you were looking at of multiple thousands percent. But my point being is Bitcoin tagged the 200 week and the bear market was over. Now we're going to zoom in 2018 market cycle. And what do you notice? We had our high, we dropped Now we have our bear market, and at the bottom of the bear, what did we do? We tapped the 200-week moving average and went on to our next bull run. So again, same thing, a prolonged downtrend, momentum died, retail disappeared, and price wicked into the 200-week. That's the cycle low. Only during the 2023 bear market did we break below, not get it back above the 200-week for that 6-month period. But again, it's the exact same thing. We had top, leverage disappears, capitulation, or not disappears, collapses. And what happens? The major players unwind, narratives implode, and price began interacting with the 200-week moving average. The cycle is reset. So, what does that mean for us right now? Well, I can tell you this, an indicator like this is not magic, it's just simple math. By the time the price reaches that kind of level, all the leverage is out of the market. All the weak hands are probably gone at that point. The volatility begins to compress. Long-term buyers step in. Look, this is not hype. This is where maximum pain in the market tends to meet up with long-term value. So now we're going to go back to the current state of the market. Now, when we look at today's chart, what do we see? We see a loss bull market support band, which happened a long time ago. The 50-week was broken through on November 10th. We have consolidation around the 100-week. That is a corrective structure developing. Now, that does not necessarily mean the bear market is over. Last time we broke below the 200-week for a 6-month period. We could still be in for more than 6 months of a bear. But historically, when we get close to the 200-week at minimum, we are quite into the bear market. This is not the time to sell, in my humble opinion. But the 200-week during this time period of the market cycle, it becomes a magnet. And here's something super important. The 200-week, it's always rising up very slowly, like the tortoise, but it's rising. So what that means is as the bear market continues, that 200-week is slowly inching up closer and closer to the candles. So it looks like we're going to still have a slow bleed and some chop until we have complete market exhaustion. That's how a real bottom force, quietly boring, makes you want to leave, is what I call, what many out here call time-based capitulation. So what could invalidate the 200-week thesis? But let's stay objective. Look, the 200-week only becomes relevant if we completely remain bearish on the market structure. So here's what I believe would change the outlook. Right now, we would have to have a strong reclaim of the 100-week moving average. And right now, the 100-week is sitting at 87.4K. We got a lot of places to break back above before we get to 87.4K. There also needs to be a break above prior weekly resistance levels, and you need to hold above key breakdown levels. If that happens, we may have already had our bear market low. But if that hasn't happened, I believe, I think we are in for Bitcoin going lower than 60K sometime this year. So as the 200-week remains in a historical gravity zone, markets are not going to reset through just hope. They tend to reset through pain, and pain is usually the best time to buy. At least that's how it's been in my experience. So the next thing I wanted to talk about is a psychological factor. Look, this is the part most people ignore. The 200-week isn't just technical, it's psychological. By the time price reaches the 200-week, all the influencers and KOLs are silent. Engagement is down to nothing. It's not really much of anything now. I mean, it's a ghost town on YouTube and crypto Twitter. Well, maybe not crypto Twitter, but definitely YouTube. Retail is non-existent right now in this space. And here's the thing, though. Do you believe builders are still there? That is when I think the real accumulation begins. So it's not happening during the all-time highs, although it's not happening during those breakout candles, but it feels like it. It's happening during boredom, the disbelief, the exhaustion. That's why you need to pay attention. Look at that chart. We all know that is the psychology of the market, of Wall Street chart. You know what I'm talking about. Maybe we'll do a video on that in the future. But the 200-week represents the final emotional compression in the market. So, in my opinion, here is our true structure. If 65K holds, we are above 65K, even though we are in a downtrend. Let's go on the 4-hour. When we tapped into it not too long ago. But if we can get back above, well, I hope you learned something new, or this video helped clarify your thinking, or made you even question something deeper in the crypto space. But if you really want to go deeper, please check out dadsdefispace.org. It has my free crypto and DeFi course, strategies, articles, and email list, the free Telegram channel where I post all of my trades and updates, real-time charts, DeFi positions, and Web3 alpha. And if you're already exploring the creator economy and the base blockchain or base app, check out my creator coin on Zora Trade. You can use our base app invite link below or our Zora invite link below. And if you really want to support the channel, come trade with us on L Bank or Blofin. Link in the description, 15% off your trading fees. And remember, everything here is optional. Everything is on chain. Stay patient, trust the process, and stay curious. And until next time, ladies and gentlemen, peace